What is up, everybody? Welcome to part 4 of this series, where basically I am breaking down concepts that make me profitable, quarterly theory concepts that make me profitable, in a long list of concept page. Like, as you can see in the bottom of your chart here, I got 99 pages of content to go through. We're on page 31 for this episode. We're going to break down 10 pages per episode. Anyways, let's stop wasting time. No cuts in this video as usual. We're just going to roll, all right? So what is sequential SMT? This is the opener because last time we were here, right? So the opener is, what is sequential SMT? Okay, sequential SMT is SMT between quarters of time, which makes it quarterly theory, right? So a quarter is as cut and dry as it sounds. 6 hours of the day is 1 quarter. 24 hours divided by 4, 4 quarters. Cool. 6 hours divided by 4 is 90-minute quarters. That's the session cycle, or the 90-minute cycle, as some of you may call it. After the daily cycle, which is 6 hours, viewed on the 15-minute chart, as we know. Weekly cycle, viewed on the 1-hour chart, and it is days of the week. So SMT between highs and lows of the day. Right? Makes sense. Beyond that is monthly, yearly, etc. But needless to say, you're focusing on SMT between quarters. So quarter 2 to 3 in this example, bearish. See, this is a actual weekly cycle chart that we took a picture of. So SMT that occurs at the highest high or the lowest low of the previous quarter of any cycle is what makes it sequential SMT, aka SSMT, right? How deep does this concept really go? Well, it goes rather deep. That's what she said. But that goes rather deep because you can do this on all the way down to like a 30-second, 5-second, 1-second chart. Just you got to do the math to get down there, right? So forms of SSMT. Number 1 is normal SMT, just quarter A and quarter B. Boom, boom, boom. There's 3 types, right? So this is number 1, regular, as you know it, as I just explained it. Number 2 is hidden. This is where you turn the wicks off of your chart, like you actually. So let me blow this up for y'all. You turn off the wicks, and you're looking for SMT with just the body. So let's say there was SMT up here. I don't think there is, and actually I know there isn't, but that would be hidden cycle, right? So that is highs and lows of the body, closes or opens, right? And close your SMT. Now, this one is a bit wishy-washy. I would honestly, here, I'll break it down to you, but anyways. So let's say, for instance, let's put our wicks back on. We take this high, for example. We closed over this high on NQ, yeah? Now imagine if we didn't on one of these assets. Does that make sense? That is what you're looking for. So let me see if I can find you an example really fast, where we close over a low on one and wick the low on the other. Nope, not quite. Check this, check this, check this. Okay, that's an example, but it's ugly. It's ugly as shit, actually. So we have this high. No, I don't like it. I don't like it. I'm sorry, guys. I don't like it at all. Yeah, okay, this is a better one. Okay, we close over this high. See in your left. Squint your eyes if you must. We close over that high. We close over this high. But we don't close over this high. Right, we just wick it. That's a form of SMT in itself. Right? That is what this is showing you. Okay, moving on. Number 5. This is just the same shit. Okay, great. 1, 2, and 3. Showing it all wrapping up. SMT with the highest high, lowest low of the quarter. SMT with the highest candle body / lowest candle body of previous quarter. Combination of both normal SMT as well as hidden SMT. It says making it the highest probability. Okay. This is, yes, it's true, because not only in this example, are you actually getting normal SMT and hidden sequential SMT, right? But unless, don't want to show you that. Unless it's this here, right? This is lower probability. It would have been higher probability if we also had the bodies and the wigs, like everything lined up. Does that make sense? Because look here, it's hidden because it's over, the bodies are over, and normal because the wigs are over, right? So both. Make sense? Moving on. Taking SMT a step further with two-stage. Okay, two-stage is just lower time frame stuff. So we can actually zoom in here. Canva makes this a bit easier than my PDF thing. So we will zoom in. Okay. So we have our closure SMT, as you can see there. See that? Boom, boom. Now on the lower time frame, we have quarters in the lower time frame. See, 1 quarter is break up into 4, right? Then you can see here, turtle soup, this eye is higher than this eye. Then you scroll over to the right, and we have a failure swing, right? So that's a two-stage. Very simple, cut and dry, right? We have 1, closure SMT, right? 2, lower time frame SMT. Two-stage sequential SMT involves going from a higher time frame cycles sequential SMT to a lower time frame cycle sequential SMT in order to confirm the expansion. This is just layering deeper into quarterly theory and understanding what it actually takes to start an expansion. Okay, 37. Let's do this. This is just another example, right? I think, or no? Yeah, this is a second stage view. So this is the 1 hour chart. Yeah, here. And this is the 15-minute chart, daily cycle. So we're actually zooming in on this right here, this turtle soup. Yeah, makes sense? That's what we're zooming in on right here. Okay, beautiful. Makes sense so far. Yes. Okay. All right, all right, all right. 38. Let's do this. Let's break this down. When is sequential SMT most likely to fail? Okay, we're going to break this down. Bullish SMT above the true open of that particular cycle, or bearish SMT below the true open of that particular cycle. So this is a step, yes. I don't necessarily follow this to the T. If we're slightly above a true open and we're having a bullish SMT and we're bullish, I will take that trade. So yeah, it's just one of those things, you know. It's a bit subjective there, but for best practices, I would say trade it. If you're bullish, trade below. If you're bearish, trade above, right? So in this example, we're putting X's here because this is what not to do, right? So if we're having a bearish SMT below the true open here, that's what not to do. Bullish above, what not to do. Understood? Cool. I think you can actually see that this is quarter A, quarter B. Anyways, doesn't matter. If higher time frame order flow is opposing the direction of the sequential SMT, or there is an opposing higher time frame sequential SMT already in play. So yeah, if you're trading with a weekly cycle and you're looking at a 90-minute cycle and you're trying to catch like the whole daily range with that, that's obviously likely to fail because 90-minute usually does not trump the weekly cycle unless it's for some type of short-term fluctuation. That's like a pullback or something like that. So as you can see, we have our bullish CST here, and then we have our SMT here, and it fails, right? Because your higher time frame is order flow is bullish. Higher time frame is order flow is bullish. Makes sense, okay? If we fail to show characteristics of manipulation on the asset that turtle soups, example, creation of a CST order block, inversion parallel gap, or breaker. That's the same thing as that what I just said. Yeah, so basically saying if we fail to see confirmation to the downside. Cool. 39, second to last. Second to last. Okay, we're locked in. New week opening gaps. This is my favorite. All right, we're locked. A new week opening gap is classified as Friday's closing price and Monday's opening. Is this centered? I don't feel like that's centered. Oh, that's bothering me anyways. Monday's opening price projected through price action, right? So there are, actually did this. Yeah, this is nice, bro. This is clean. This is clean. Why do you think size matters? That's what, never mind. Small, medium, large, right? Pretty self-explanatory, pretty easy to understand. And ending off with number 40, we're getting right into my favorite. We'll have to touch on more of my favorite stuff in the next few episodes. But new week opening gaps, how do I use them with quarterly theory? Very simple, very simple. You use them with anything. Listen, anything within a new week opening gap is immediately high probability. So your SMTs, your sequential SMTs. This is actually my model for a long time. I still trade with it. Sequential SMT within a new week opening gap. Simple, cut and dry. It's fucking killer. Okay. So here we sweep sell side, we flip a breaker and we're going higher. Breakers within a new week opening gap. Beautiful. Right. This example, we don't sweep sell side. We have sequential SMT at the highs. Bodies are within the new week opening gap. This can wick out. That's okay. It's permissible. You want to see the bodies close inside of it. Then you wick the 50 level and you're heading on lower. Entry would be in around there in the lower time frame. Now, if you enjoyed this video and you want to see more of this, because I'm going to go all the way to 90, right? It's going to be like a 10 or 9 or 10 part series, me breaking down all this stuff. Just let me know. Comment, say something. You know, this doesn't take too much time away from me because I'm making content out the ass right now. But yeah, if you want to learn about Accelerate, links in the bio, free indicators, all these ones, everything that's in here is all in the bio, all of it, right? All free, unless you're in India, Bangladesh, Pakistan. Some countries are banned. I don't know. Yeah, so it's all free. Go claim it. Go do whatever you want. It'll be free forever and ever and ever and ever. Okay. Peace out.